Hey everybody, it's Alan Brochstein from New Cannabis Ventures and 420 Investor, and I'm trying to get you up to speed with my weekly update. Again, the idea behind this video is to add a little bit of context to some of the stories that we're publishing at New Cannabis Ventures. What I like to do is start off with a brief market commentary and then kind of walk through our weekly newsletter that we've been publishing for the last 6 years. And so it was another down week for the market. In fact, the global cannabis stock index posted a new 2021 closing low. Not too different from what it was before, but yet despite a little bit of a rally late in the week, that Wednesday low is now the low for the year. I think last week I spoke about this divergence. I've actually been talking about it for a while. The MSOs bottomed on September 14th. In particular, Trulieve bounced incredibly from that point in time, but some others have as well. I shared with my subscribers at 420 Investor a look not only at all the MSOs, but actually a lot of different cannabis stocks since September 14th. And it's pretty clear that at least for now, there's a little bit of interest in the MSOs over the last 3 or so weeks, while many of the other stocks have gone on to make new lows, particularly two types that jump out, maybe three. Some of the international players have made new lows, but the two that really stood out that I think are more important are the Canadian LPs and some of the ancillary players, especially Hydrofarm, which has posted a new all-time low. So that's really the overall market. We've been in correction, consolidation, raging bear market, whatever you want to call it, now for almost 8 months. And I was asked a really good question in chat this week at 420 Investor about, at what point do I become concerned that we're not in a bull market? And I continue to believe we started a bull market, a long-term bull market in March of 2020. And we had this nice run into August of that year, and then we had a pretty substantial pullback into September before going on to make new highs. And so, from my longer-term perspective, this is still a correction of that larger move. And I mentioned there's some other things that I'm looking at, but I think the easiest way to characterize it is, if we start to see a lot of the stocks take out their lows from late September last year, that could be problematic. And that's certainly not the case in the MSO space or in the ancillary space, but in the Canadian LP space, it's a little bit of an issue. So one of my big themes coming into the year, and I've been talking about this publicly as well in some of the other newsletters at New Cannabis Ventures, is, in the past, all these cannabis stocks moved very similarly. And I suggested, and I think it's been the case, that there's a lot more differentiation, even within certain subsectors, but certainly between those subsectors. So that's kind of my quick market wrap. It's a little bit longer than I anticipated. So tomorrow's newsletter, which will be published, it's sent out by email at 8 Eastern, and then we publish it to the website at roughly about 11 Eastern. Again, it includes links to what I thought, or what we thought, were the most important news stories of the week. There were a lot of stories this week. Monday was a flood of news. But it also includes some insight into the market. And this week, I talked about one of my favorite topics, which is, I think, one of the big themes that for the last several years, certainly in January and February of this year, or even going back to the elections, these large LPs get way too much attention. These are not good companies. Now, I'm talking about, Canopy, Aurora, Tilray, even Cronos. These are really not good companies, in my view. And for things to work out for them, they need the U.S. to open their doors, and that doesn't appear to be very likely, or they need some other international markets to really take off. But I think this piece, which I don't want to give too much of it away, talks about the juxtaposition of the success of the Canadian cannabis market. it's been very successful. It could be a lot more successful. I talk about that, but at the same time, investors, it's been a complete failure. And this is not new and unusual, but here's the new Cannabis Ventures perspective. And I'm not going to give it all away. You'll have to read it. But there are ways to benefit from the growth of the Canadian cannabis market. It's just not the largest companies. And so nothing necessarily new there, just more of a reiteration. We've been talking about this for quite some time. But some of the news items that I'll mention in just a moment really drive this point home, in my opinion, or help to drive it home. So with that, again, we publish as much news as is necessary during the week and not one story more than is necessary. And our content is a mix between proprietary content, which we always include in the newsletter, and then the press releases that we republish as well. These press releases, we've taken some criticism over the years for all they do is just republish press releases, but that's not exactly the truth. There is truth to that. We do republish them, but it's really not what we republish. It's what we don't republish. So many cannabis websites out there either don't understand or they're just so desperate to build traffic that they waste your time by publishing news stories that nobody cares about, and we don't do that. So what I'm about to go over isn't all the news we published this week, but it's what we thought was the most important. And again, when we're publishing press releases from companies, they tend to fall into three categories: capital raises, M&A, and financial reports. Those are the three pieces. And this week there were so many stories. You're going to see my eyes shift a little. I got to look at my list just to remember everything, honestly. So I'm going to start with the M&A. And so this week there was a lot of M&A, or it seemed to pick up. It's been pretty slow. The first one was Forefront. They're investing $55 million to buy New England cannabis, something or other, in Massachusetts. And so we've seen a lot. This is a repeat of a similar type of deal that we've seen a few times. Jushi did it. Cresco did it. I believe there's some others as well. And so Massachusetts is a very interesting state. There's a canopy limit, so there's going to be a lot of good players. This is actually a big theme for all of the United States. A lot of people like to pick who's going to be the biggest and the best, but the reality is there are going to be a lot of really good and big companies, and there will not be a dominant company. In Massachusetts is a great example of why that's the case. So now Forefront paying up these, I don't think they gave the financial detail, by the way, but these are very inexpensive deals. And I think it comes with the fact that the upside, once you hit full capacity, you're not going to really grow except through pricing, right? Because you can only grow so much flower. So that was the first M&A. I thought this one was really interesting. Agrify bought two companies. These two companies merged in June, so not that long ago. And Agrify stock shot up in the after hours. I shared with my subscribers at 420 Investor my negative perspective on that deal. I'm not going to get into that, but what I wanted to point out was it wasn't very well received by the market, and I think I know why, but like I said, that's not really the point in this, but it was a big deal, and it was a seemingly cheap deal as well. Agrify, if you're not familiar with it, I think they're sitting on potentially a holy grail, but it's just too early to tell if they're going to be successful. I wish them success. It's really a game changer. I've written about this before for my 420 investors when the stock was down around 7 or 8, maybe 9. But what Agrify is trying to do is to bring standardization to cultivation and with their technology. So this deal, a little bit different in my opinion, but and that was a big announcement. They paid $50 million for these two companies, a combination of cash and stock. Another M&A announcement, as I scanned down my list, was so this one was bittersweet to me. So I have followed Alcanna since 2018. And it's been a company we've interviewed at New Cannabis Ventures, not only Alcanna, but also Nova Cannabis several times. It was a stock that was on my focus list, which is now 26 companies after its exit at 420 Investor. And so Sundial is buying Alcanna. Again, I advise everybody to just sell Alcanna on any sort of pop because it's not likely to go up in the short term. And I say bittersweet because I think that Alcanna had a very bright future. I like what they're doing with Nova Cannabis, and that stock was a very cheap stock. But they're selling out to Sundial. Sundial trades on the NASDAQ. I think it trades near book value, but it's below $1. It's going to be facing delisting at the end of the year again, unless they can get back above $1. And I don't want to get into it, but that was a very important deal. Why? Why do I say that? It kind of ties in to the piece we wrote about. There are ways to make money in Canadian cannabis, right? There you go, right there. You could have owned Alcanna, and it just got acquired. And unfortunately, loose lips in Canada on that one. And so the stock started to run up. They had to issue a press release explaining that they were in negotiations to do a transaction. And this week they announced the transaction. So the upside happened before. It did not happen after the deal was announced. More M&A. The last one. So this is number 4 or 5? 4. The parent company. They announced a deal to buy Coastal. Coastal is in their wheelhouse in terms of what they've told investors they're trying to do, which is to expand their retail presence and their delivery presence. And so the deal was, I think, $16 million cash and up to $40 million in stock. And there was a little bit of controversy, I guess, because Coastal, and this litigation became public like two weeks ago or maybe 3 weeks ago. Adam Bierman and Andrew Moglen, formerly of MedMen, were suing the people that control Coastal, their investors there, for selling out at a fire sale price. So I saw that lawsuit. It's like, this is going to be interesting. I wonder who's buying them at a fire sale price. So it was the parent company, and investors apparently didn't pick up on it. It is a fire sale price. It seemed like a good deal. But anyway, that was the M&A news. And then turning to capital raising. So one, the reason I think this is important, so AFC Gamma, and we didn't run this story yet because we're waiting for it to be priced. They, the story that we ran and that I thought was important, they boosted the Justice Grown credit facility rather substantially by more than $50 million. And I think 40 of that 50 is coming from their own pocket. And so the next piece of this, and this will be next week's news, they're in the market with a capital raise of $100 million. So the reason why this is important, look, these cannabis stocks, the MSOs, are struggling right now. They seem to be basing, but a lot of them are down year to date. Most of them now are unchanged. Complete round trip, despite really not too much change in the fundamentals. Historically, when these companies have been in decline like this, it begs the question, who's going to pay for the future expansion? And so I love seeing the fact that AFC Gamma is one of many companies putting the money out there in a non-dilutive way, and this is mortgage debt. So they're raising more money. And this has been something I talked about last week as well. We saw the Goodness Growth and IIPR sale leaseback. This week, we didn't even run the story because it's closing a deal that was already announced, big deal. But Trulieve closed their $100 million debt deal, 8%, 5 years, callable, no equity. I mean, it was fantastic. This is not a problem. Capital is not a problem right now for the cannabis industry. So that's why I think stories like the AFC Gamma expansion of debt offering is important. And then now that was it for the capital raising this week. No, I take that back. So the other one was Akerna, and look, I don't think KERN is that important of a company. That's just my own view. These guys were there at the beginning, but they had their chance and they have not really done much with it to this point. But this was an interesting story. I don't know why they did convertible debt when they did, but they sold convertible debt last year, and the stock just started tanking right after that, and it never recovered. And KERN has been a very poor performer. They just refinanced that debt with the same lenders, and instead of the conversion price being 10 or 11, whatever it was, I think it was 11 and change. It's now $4.05. So kind of reminds me of the olden days, sadly, when you had these OTC companies issuing all these toxic financings. So, unfortunately for KERN, it turned out to be a toxic financing. They had to really refinance it at now a much lower price. So originally borrowing that money at a convertible price instead of issuing equity at the time, which would have been so much smarter. Now it's a $4 conversion instead of, I think, $11.50. So interesting, not so positive story. That was $20 million. And I think the $20 million is actually more money now too, if I'm not mistaken. But anyway, then the final type of story, as I mentioned, that we typically run would be, that's non-proprietary, would be on earnings reports. In Tilray, this was, going into it, I had suggested that it would be potentially a small miss. And that's what it was, really. And Tilray, it's a tough thing to, when you read the report, to understand what's really going on. And because they did this merger. So I spent a lot of time doing apples to apples here. And you can't be exactly precise because a year ago, Tilray, the company Tilray then, they were reporting on a regular calendar quarter, a December year end, and they did report their financials ending in the quarter of September. Aphria, which is now Tilray, did report and does report on a fiscal year that ends in May. So this was their Q1 ending in August. So you can go back and you can get the old Tilray information because it's actually in the Tilray filings right now. So you go back and you look at the old filings. And then you can go back and look at the original Aphria filings from a year ago. So the report that came out was, so they included their year ago numbers that were Aphria then, but it's called Tilray now. So it's a little complex, like I said. So anyway, if you take the time to do this, what you'll see is their adult use sales fell 7% roughly. Like I said, there's this August-September issue, but they fell roughly 7% from a year ago, adult use. Adult use has expanded at 67% at the retail level in that same time frame. So Tilray, and they're not alone, Canopy, Aurora, they've all lost massive amounts of share. This is a huge story, and it gets back to the point of this newsletter in the piece that I wrote. So the largest operators in Canada, including the combined Aphria Tilray, they are not succeeding in their home country. As a matter of fact, I wrote this yesterday. Today, I read it in the Wall Street Journal, so I'm a little disappointed with the timing. Their article's not as good as mine, but anyway, they made the same point. And so it's nice to see high-quality publications drilling in on the same issue. It's an important issue. So Tilray's report, it's always difficult because they have this pharmaceutical distribution revenue. They have now the beer revenue, which wasn't there a year ago. They have the hemp food revenue, which you have to pull out of Tilray. And so when it was all said and done, how's this company doing well anywhere? It's a rhetorical question. They're not. There was only one area, to be fair. The international growth, it was 0 a year ago. But if you go back and you look and you see what Tilray was, they basically doubled from 5 million to 10 million. So if you annualize that, let's even give them a little credit. Say they're going to be a $50 million international cannabis revenue company. What's that worth? Is that worth 10 times? Let's say it is. That's 500 million. How do you justify $5 million for the rest of the company? It's not there. So anyway, that's a little editorializing. So those were the non-proprietary content. And as I've said, we run a lot of proprietary content. It tends to be either the interviews that we ran, there were 2 of those this week, or reviews of certain markets. There was 1 of those this week, Illinois. I'll have Michigan ready tomorrow, Sunday night, or maybe Monday morning, we'll see. And there was also the monthly, sometimes I do it bi-monthly during earnings season, but the review of our revenue tracker. So these are the types of content that we tend to run. And there was actually one other one that was the BDSA data for August came out. And I had talked about that in our newsletter last week. And so I'll just mention that briefly now that it's out. I didn't talk about the numbers last week. I just said they were bad in our newsletter. Indeed, they were bad. This is a tough thing to think through. A year ago, flower sales were surging in very mature markets like California, Colorado, and Oregon. And so we're seeing a little bit of payback this year. And in those 3 markets plus Nevada, the year-over-year growth was anywhere from -7% to -4%. The other Western market that BDSA covers was up year-over-year, but that's Arizona, and it's only up because of the addition of adult use. In fact, medical has declined 30% from a year ago. I mentioned whatever that number actually is in the piece that I wrote. So those are the Western markets. And then on the Eastern markets that BDSA covers, things aren't bleak like that. There's a lot of growth, but we're certainly seeing a slowdown. Excuse me. So that was the first piece. And then on the Illinois market, so we have September data now for them. That BDSA data was for August. And Illinois no longer seems to be reporting their medical numbers. So we're just writing about the adult use. And it was pretty flat sequentially. And there's 1 less day in September than August. So on a per day basis, it was up a little bit. The year-over-year growth rate slowed a bit, but it's still 80%. So in Illinois, a bunch of dispensary licenses were awarded, but they're not open yet. And until they get open and there's legal issues, that market is probably going to slow. There needs to be additional distribution to drive the growth there. So that was the market data information. The 2 interviews that we did, one was with Body and Mind, full disclosure, they're a client of New Cannabis Ventures. And Body and Mind has been operating in 4 states up until recently, and they've announced expansions into Michigan through license wins, and in Illinois through a partnership with a social equity applicant, two of them actually. So this is an interview with both the CEO and the COO, and I'll just leave it to you. I find the company to be rather under the radar, to say the least, but seemingly moving in the right direction, and you can read that or even listen to that interview. And then the other interview we did was with recently public New Lake Capital. We have interviewed them before they were even announcing that they were going public. And so this one was with their CEO and their chief investment officer as well. And the 2 of them really explained their business. One of the questions that we asked seems like a great one to me. Like, why the heck are you guys on the OTC when AFC Gamma just listed on the NASDAQ and IIPR is on the New York Stock Exchange? It was one of those questions, like sometimes journalists ask questions that they already know the answer to. I already knew the answer, but it was nice to hear their response. I'll leave it to you, but they did not give the real reason, by the way. Well, they did not do it. It was just not done. So I'll tell you that part. rumor has had it, and I believe it to be true based on the fact that NLCP doesn't trade on the New York Stock Exchange. The rumor has always been that IIPR basically got listed accidentally. The New York Stock Exchange goofed. And originally, IIPR talked about being medical only. I don't know if that helped them or not, but it doesn't even matter. It's still federally illegal, whether it's medical or non-medical. Medical cannabis is no different than adult use cannabis. In the same market, it's the same product often. So however IIPR got there, nobody else has been able to get to the New York Stock Exchange. And we're talking about, they're both the same. They're triple net leases. And so I'm not a legal expert, but I think this is what it's about. IIPR and New Lake own cannabis producing facilities. They own those properties. They are breaking the law. Period. End of story. So somehow IIPR gets listed, NLCP doesn't. So I'm telling you a lot of stuff that wasn't even in the interview, by the way. The interview was interesting, and it's unfortunate they're on the OTC, but they are. So I think your next question is, but wait, why did the NASDAQ list AFC Gamma? Well, AFC Gamma doesn't own any properties, right? They are issuing mortgage debt against them. They're not taking an ownership position. So I guess that's the reason. So those were our two interviews. I told you about the two market pieces. And then there was one other one, which was our revenue tracker, the update. And honestly, a little bit boring because there haven't been that many reports. And I don't have that much to add to it beyond just to say, so we talked about the Aurora report, obviously. And I think, my angle, I'm always trying to kind of come up with some bigger takeaway than just saying, well, this company did this and this company did that. Were there any dots to connect? And I think the dots to connect in September, which is what we were talking about, there weren't that many reports, but there were a few dots. And those dots they kind of tie into the theme of this week's newsletter. The dots were the largest LPs seem to be swimming up the river while the Canadian retailers seem to have the wind at their back. I mixed my metaphors there. But as a cyclist, I know what it's like to be riding my bike into the wind versus having it behind me. I know which one I prefer and when I prefer it if I have to do both. But so that was a stark juxtaposition to look at the numbers coming out of last month, Fire and Flower and High Tide, and then Aurora. But there was a lot more in that piece, and one of the things that we do, if you haven't read that piece before, is we discuss, at least for the largest companies, kind of what the expectations are for the upcoming reports. There aren't that many reports in October. We shared the information at the time for Tilray, of course. Valens will be reporting. This week we get a report from Valens this week, and then Hexo will be reporting. They haven't announced a date, but later this month. And then in the United States, I don't think there's any. So anyway, this is the longest video I've done. But like I said, I thought this was a very busy week with a lot of news, and so I hope you enjoyed this. And I will be back next week, hopefully with a better backdrop. Take care.